From 13ABC, Conklin Company, with 13ABC Action News anchor Lee Conklin. First, with what's happening behind the headlines. And Take 3, our panel of political analysts.
Morning, everybody. Welcome into another edition of Conklin Company. Today on the program, the fiscal cliff, the compromise coming or not. Our Washington Bureau Chief, Jacqueline Pulla-Castro, talking with your representatives in Washington. We're going to talk with Jacqueline from our nation's capital and other issues coming up a little bit later on. Also, the Help Wanted sign up at Toledo City Council with Phil Copeland moving on to become the new Lucas County recorder. That and the mayor's latest trip to China in Take 3 with Ignacio Messina from the Blade a little bit later on. But first, the U.S. economy, your personal economy, as it relates to the developments in Washington and the re-election of President Obama. Financial analyst, investment analyst, contributor to many 13 ABC Action News reports, Alan Lance of Lance Associates, and the Lance Letter joins us once again. Good to have you on, Alan. We appreciate it.
Thank you, Lee.
You know, we're 10 days removed now, about 11 days from the election, the re-election of President Obama. And as we sit here on this Friday, getting close to the close of the day on Wall Street, another week, and the Dow, a precipitous drop from that first day, 24 hours after the election. We had the largest one-day loss of the year, and we heard about Europe and the re-election of the president is combined for that. But your thoughts now as we hear so much about this fiscal cliff.
Yeah, it's not only the fiscal cliff. I mean, the fiscal cliff is a big factor, and obviously the uncertainty involved with that. But, you know, you've also had a situation where Europe still doesn't have their act together. China's slowing down, and the Mideast tensions have continued to grow in this, 10, 11 day span. So you combine all that, you almost have a perfect storm of people not wanting to buy, and taxes are not going to be lower than this year, 2012. We know that no matter how the fiscal cliff ends up as far as for dividends and capital gains. So it's really, a strategy to sell. Now, our clients, what we recommended is selling in September, early October when the markets...
Before this happened.
Exactly, when the markets were hitting 5-year highs. But, people are prone to emotion, and that's what they're doing now. It's like panic selling, and if they have a profit before they lose too much, get out.
Yeah, when it's going good, you tend to, hey, let's hang on. Let's ride this. Let's ride it while it's good, right? And but you've heard a number of things about surviving recessions, and we had the one back in '01 following September 11th, and of course, would it be '08 or '09? This pretty severe recession. Coming out of it, jobless numbers here in Ohio down again as of this past Friday as we tape here, below 7%. But you mentioned the perfect storm and in this confluence of factors coming together. I guess the biggest of which, if our lawmakers dig in and don't compromise come January 1st, everybody's going to lose money, their paychecks, right?
Oh, yeah. And
we're looking at significant spending cuts, too. So your level of concern, one, as an investment analyst, and as an American citizen, I mean, what your level of concern here?
Well, as an American citizen, I think it's very unfortunate. I think, it's important to get the politics out of the way and really do what's right for the country, and I hope that's what we see. And I expect that we will have a resolution. It's just a matter of timing. The longer it takes, the more uncertainty, the more people see their 401ks go down that haven't taken profits, and it's a snowballing type effect. So I think that the most important thing for investors is to realize that if this fiscal cliff does go through, it's a situation where capital gains, dividends, personal and business taxes will be higher. Our recovery, Lee, was anemic already, and this will push us into a recession. So it's something that we really cannot afford at this stage of the game.
I mean, there's true concern here. I mean, it's not just, hey, let's ride this out, it'll all be fine. I don't want to get into the nuts and bolts, the inside baseball of politics here when it comes to investment. But we know the history of Mitt Romney and Bain Capital, investing, and the president elected. Did Wall Street just react and say we don't like the fact that Barack Obama was reelected, in your estimation?
Not really. I hear that a lot, and I have to disagree. I just think it's a situation where you have a divided government right now, and whoever was elected for the White House, you would still have that situation. You'd still have that uncertainty. So I think, you know, you combine that with China slowing down, with, you know, what's going on in Europe. They still don't have their act together. We talked 2 years ago what they needed to do. They still haven't implemented, you know, anything in 2 years. And then, you know, a situation with the fiscal cliff and the Mideast tensions. And, you know, it's something that you can't just blame on President Obama.
I mean, it's really over a 2-week period. You have, you know, everybody knew you were going to face this fiscal cliff as the election was going on, but uncertainty in Europe, Asia, and now the Middle East this week, especially the violence flaring up in Gaza and Israel, it leaves so much uncertainty out there, I guess. And when you talk about someone who, it's interesting, in your letter, you mentioned protecting your nest egg in a recession. Many people nearing retirement can't afford to lose that money, right?
Exactly.
There's not that time to recover. So what do you suggest for folks who, you know, as we're on the brink here?
Yeah, I mean, just to give you an idea, Lee, the dividends are going to go up 2.5 times as far as, you know, from 15%, you know, to ordinary income rates if the fiscal cliff, you know, goes through. The retired individual cannot afford that. So, you know, it's a situation where, you know, profit taking was in order. They could actually sold with no capital gains, you know, in September when the market was hitting new highs. Everybody knew the taxes are going to go up, that we're going to face this fiscal cliff, you know, situation. So I don't know if it's a situation where, you know, they're ignoring it till the election, or they thought the election would bring some type of clarity. But, you know, obviously it didn't.
Anything but.
And now you're getting into panic mode where you know, there's 12 sessions left as far as, you know, for Congress, and there's, you know, a situation where, you know, the new congressmen are sworn and women are sworn in, you know, January 3rd. Right. A lot of uncertainty. They, you know, they might have made a little bit of progress, you know, today, Friday, for, or when we tape this, the Friday, you know, with, as far as not digging their heels in as much.
I mean, a conciliatory tone, at least, right?
Exactly.
And we'll talk to Jacqueline Policastro in Washington about that in just a minute and get more on what's happening in Washington. But when you see that, and when Wall Street sees that, hey, maybe they are willing to compromise. We've seen Speaker Boehner say, okay, we're willing. He's been more willing to talk compromise than he has been in the past, no question.
Definitely, definitely. And I think that, you know, that's a good stride. And, you know, the market reacted. The market bounced from new lows, you know, and, you know,
to flat.
Yeah, a little bit up or, you know, or whatever. Right. But the situation is, you know, there's a long way to go. We need a lot more progress, and hopefully, you know, we'll see that.
What's the best thing that can happen in the next couple of weeks? It is a permanent compromise in Congress before January. Is that the best thing that you can see? Because Europe's not going to get solved overnight.
Yeah, Europe won't, and I still think you're going to have these uncertainties in the Mideast and China's slowed growth. I think just continued progress. I don't think you'll see compromise in the short time frame. So I think
if there's a Band-Aid or a stopgap.
Exactly, extension, and then do it right and avoid going through the, you know, debt ceiling like we did a summer ago. Right. With you know, a downgrade and you know, more uncertainty where the markets went down 7% in 1 week.
You know, are your investors, are they getting real tense right now? You're getting a lot of calls in the office. You know, what's going on? What are we going to do here?
Well, it's interesting. We sold Apple. You know, recommended selling it. We sold partially for a client in their taxable account, just because, again, lower capital gains rates for 2012, and all in their retirement account. And they emailed Friday morning saying, you know, should we buy some? We sold it at 702. It's down in the 505, 508 area.
And percentage-wise, that's a significant fall.
25, 30% for a great, you know, great company. But again, that's that risk management technique that's so important. I think the average investor is really getting disenchanted with this buy and hold, where they watch it go up and then back down. And it's a lot easier to pull the trigger and buy, you know, at 505. You know, if you took some profits at 700.
So, but you wouldn't recommend I go out and buy gold bars and fill up the basement with gold bars? Not that I could do that anyway.
But no, I think it's okay to have gold into weakness in case this develops. It's almost like an insurance policy more than any kind of investment. But no, you know, the survivalist type investment, you know, I think is another end of the extreme that's not warranted.
All right, hang in there. We'll see what happens. Alan Lyons, thanks very much, as always.
My pleasure.
We'll see you down the road here. We're going to come back in just a minute. We're going to get in touch with our Washington bureau chief. We're going to talk about this fiscal cliff and room for compromise when we come back.